At this very moment, on this Thursday morning, December 4, 2025, Rezolve AI PLC is trading right at 2.68 USD. We are looking at a green intraday move, up 0.070 points, or roughly 2.68% for the session so far. If you are just glancing at the ticker tape on your Fidelity mobile app or checking your watch list, you might see this green number and think it is just a standard relief bounce. But if you zoom out even slightly, what you are actually witnessing is a desperate and violent fight for stabilization. This stock has been a battleground of volatility over the last week, flushing down from the $3 range, shaking out weak hands and testing the resolve, pun intended, of every single retail holder. The general expectation right now, the lazy narrative floating around the message boards and chat rooms, is that Rezolve AI is just another de-SPAC or IPO casualty, a company that made big promises about artificial intelligence but is now bleeding out as the lockup periods expire and the hype fades. They see a stock under $3 and assume junk. They assume it is a falling knife that you should not catch. But here's the reality that the bears are completely missing, and it is why this 2.68 USD price point is so deceptively important. Rezolve AI is not shrinking, it is aggressively expanding through a roll-up strategy that the market has not yet properly calculated. While the stock price has been pressured by short-term sentiment and broader market skepticism about unprofitable tech, the underlying business just fundamentally changed its DNA with the acquisition of Crownpeak just days ago. This is not a company that is quietly dying, it is a company that is buying revenue and buying infrastructure to force its way into the big leagues of enterprise software. The disconnect here is massive. The market is pricing this like a distressed asset, yet the company is projecting an annual recurring revenue exit rate of $500 million for 2026. If they hit even half of that target, the current valuation at these levels will look like a historical anomaly. You're looking at a classic show me story, where the price is lagging behind the execution, creating a tension that is palpable. Let's dig into the immediate price action we are seeing today. That 2.68 USD level is acting as a critical line in the sand. Technically, we are seeing a defense of the 250 zone. The fact that buyers are stepping in here, pushing it up nearly 3% this morning, despite the recent bearish momentum, suggests that institutional accumulators might be starting to nibble. When you look at the volume profiles typically available on advanced interactive brokers trading platforms, you often see volume spikes at these lows. This indicates a transfer of inventory from panicked retail traders who bought the hype and are now selling the fear to longer-term holders who understand the SaaS metrics. The market is currently in a wait-and-see mode regarding their cash burn, which is the primary anchor dragging on the stock. But today's green candle is a signal that the sellers might be exhausting themselves. To understand why this stock is so polarizing, you have to understand what Rezolve actually does, because it's far more complex than just another chatbot company. The term you need to know, and the term that will likely define their 2026 narrative, is agentic commerce. Most people are used to static AI. You ask a question, it gives an answer. Rezolve is building AI that does things. Their brain power large language model is designed specifically for commerce. It's not trying to write poetry or code, it's trying to sell products. It allows a consumer to have a conversation with a retailer's digital brain and then instantly execute a purchase within that same conversation. This is the holy grail of mobile commerce that everyone from Apple stock analysts to Amazon veterans has been talking about for a decade. The expectation is that this technology is years away. The reality, which Rezolve is trying to prove, is that it is here now, and they're the ones powering it. Let's talk about the Crownpeak acquisition, because this is the specific news event that should be dominating your thesis right now. On December 1, just a few days ago, Rezolve announced this deal. The The market's initial reaction was confused. Why is an AI company buying a digital experience platform? But this is the genius, or perhaps the gamble, of the strategy. Crownpeak brings immediate revenue, established enterprise customers, and stability. It effectively raises the floor of the company. It transforms Rezolve from a high-growth, high-risk speculative play into a more diversified software holding company. For those of you managing Schwab Intelligent portfolios or looking for investment help, you know that pure-play AI stocks are incredibly volatile. By buying a stable asset like Crownpeak, Rezolve is trying to dampen that volatility and give Wall Street a more predictable earnings stream to model. It's a maturity move. It says, we are not just playing with tech, we are building a conglomerate. However, we must address the burn rate elephant in the room. This is what keeps the stock pinned at 2.68 USD. Expanding this fast costs a tremendous amount of money. The company has been burning cash to fuel growth, reporting a significant net loss in the first half of the year, despite a staggering 426% revenue growth. This is the classic growth versus value tug-of-war. If you are a conservative investor who prefers Fidelity Investments mutual funds with steady dividends, this chart probably makes you nauseous. You see the losses and you run. But if you are a growth investor, you look at that 426% revenue jump and you salivate. You understand that in the land of SaaS, you spend $1 today to make $3 over the next 5 years. The market is currently punishing them for the spending, ignoring the growth. This punishment is your potential opportunity, provided they don't run out of runway. I want you to pause for a second and check your own sentiment. Comment below if you think agentic commerce, shopping through AI conversation, is actually the future, or if people will just stick to scrolling through Amazon apps. Do you hold Rezolve shares, or are you waiting for them to turn a profit first? Let me know in the comments, because this consumer behavior shift is the entire bet here. Now, let's look at the partnerships. You cannot evaluate this ticker without looking at who is standing behind them. They have strategic alignments with both Microsoft and Google. When a small-cap company like this gets the nod from the trillion-dollar titans, it validates the technology in a way that a press release never could. It means their brain power model works on Azure. It works on Google Cloud. It means they have distribution. For an individual brokerage account holder trying to pick winners, distribution is the magic word. You can have the best AI in the world, but if you cannot get it into the hands of retailers, you are worth zero. Rezolve is piggybacking on the infrastructure of the giants to get their product out there. This lowers their customer acquisition costs and speeds up that path to the $500 million ARR target. Let's delve deeper into the brain power versus generic LLM debate. The biggest risk for companies like Rezolve is that the foundational models like GPT-4 or Claude become so good that they make specialized models obsolete. This is the wrapper risk. Is Rezolve just a wrapper around OpenAI? Their management argues vehemently that the answer is no. They claim their architecture is built specifically to avoid hallucinations in a retail context. If you're asking an AI about a sweater and it hallucinates a discount that doesn't exist, the retailer loses money or the customer gets angry. Rezolve's specific value proposition is accuracy and transactional capability. They're betting that generalist models will always be too risky for enterprise commerce and that a specialist brain is needed. If they are right, they have a massive moat. If they are wrong, and GPT-5 can do commerce perfectly, then Rezolve's tech value drops to near zero. This binary outcome is why the implied volatility on the options chain is so high. The institutional picture is also fascinating. We are seeing early signs of interest from major players, but they are cautious. Funds that typically use Fidelity Wealth Management or Interactive Brokers trading desks are watching the lockup expiries closely. Often with companies that went public via SPAC or similar mechanisms, there is a flood of insider shares that hits the market 6 to 12 months post-listing. This fear of dilution is a constant wet blanket on the stock price. Investors are asking, is the selling over? The stability we are seeing today at 2.68 USD suggests that perhaps the supply glut is being absorbed. If the stock can reclaim the $3 mark and hold it, it would technically confirm a higher low and could trigger a wave of algorithmic buying. Now consider the macro environment. We are entering 2026 soon. The hype cycle for AI infrastructure, chips, data centers is maturing, and the market is desperately looking for the application layer winners. Who is actually making money using the chips? Rezolve positions itself exactly there. They are the application layer. They are the ones trying to monetize the compute power. If the market rotation shifts from hardware, NVIDIA, to software, Rezolve, Palantir, Salesforce, this stock